Let's take a look at the rand and the kind of movement we're seeing on that front. It has seen some weakness filter through, so a bit of a break in that positive momentum, but it has been pretty slight.
It has been. I think that the move that we saw specifically on Friday and at the end of last week was driven out of the Eurozone. We've seen the Euro trading almost up at the 145 level, very significant level. But we have seen a bit of retracement after that. And the questions that are coming out again, what's the outlook concerning the fact that there are 27 economies in the Eurozone and that interest rate hike, and what are the impacts going to be on an economy or a group of economies that are still remaining under extreme amounts of pressure. So yes, there's a lot going on in the currency markets, as well as the fact that we've seen oil trading up at $127 a barrel, and then you've seen the gold price also galloping. So there are those kind of things that are keeping rand relatively strong. We're seeing continued impetus coming from offshore buyers into our local markets, and then obviously our local importers keeping the rand relatively well based, with a little bit of mopping up of excess dollars by the Reserve Bank. So those are the kind of dynamics that are operational right now.
Let's take a closer look at that euro-dollar story. It seems to have run into some resistance at about that 144 mark, and the ECB rate hike can only, as you were saying earlier, propel that much, where the underlying story, especially pertaining to the Eurozone debt situation, still persists, right?
That's correct. I think that there's two dynamics in the Eurozone that are slightly different to potentially any other economy in the world, and that is the fact that they have, one, they've got 27 economies that they're managing, which are all have their own dynamics, which makes it quite a tricky situation to manage. But secondly, they've also implied a stability program whereby they have the opportunity to bail out those that are weaker, but also buy back the bonds in those regions, and that relatively controls the exchange rates in those regions that are potentially weaker, whilst keeping in check the likes of Germany and France, where we're seeing a inflationary pressure come through. So it certainly is a very, very tough ball to balance, but nonetheless, I think that the ECB are doing a fine job about it, and that's why you've seen the rally on the currency. The currency's exceptionally strong, sitting close to 145.
Let's take a look then on the flip side, looking at that dollar, where we've seen a weakness filter through there. Many saying that moving forward, we shouldn't see that much of a loss coming through. More losses seem less likely at this stage of the game.
Look, I think at the moment there's a lot of speculation, specifically around whether or not we'll see an implication of a further round of the quantitative easing that we've seen previously. That's still on the balance. There's obviously talk now about the stance that the ECB's taken versus the stance that the Fed has taken, and those are quite divergent in view. At the moment, there's a little bit of pullback on the currency because we've seen a massive move on the euro, and it's potentially boding or looking like dollar strength. But I still think that the inflationary picture remains something that is on the horizon. You know, you're seeing the likes of oil prices across the globe, the exogenous factors. You're still seeing a drive into commodities. You're still seeing a pickup of demand from the likes of the emerging markets, specifically those in the Asian region, and those are going to continue to drive those kind of sentiments that are currently in place. And I think that in South Africa, that's something that more and more of us are talking about. When can we expect to see an interest rate hike? Our Reserve Bank isn't that hawkish at the moment, but nonetheless, we are expecting to start seeing second-round effects filter through as the consumer comes more and more online.
Of course, and that on a worldwide basis, we're expecting CPI data for the US, the EU and China this week. What's your outlook there? Because it will lend towards that argument of just how much more tightening we're set to see moving forward.
Look, I think, the thing is that ultimately the oil price and certainly the food prices are starting to filter in, and you're seeing inflation coming out higher and higher month on month as the figures are announced out of all the regions, and that's a global thing. That's not just something initially that started in China, filtered through into other emerging markets. If you look at emerging markets in South America, emerging markets in Asia, definitely seeing inflationary pressures filter through, and you're seeing that happening now in the more developed nations, where unfortunately there isn't that consumer or underlying demand that it is helping to drive that. So the exogenous factors are definitely something that we're seeing coming through in the inflation. The bigger concern is how are they going to manage that in an environment that still desperately needs growth and certainly doesn't want to take the consumer or the consumer demand out of the picture. So it's, like I said before, quite a rough road that we can face, but I think that we certainly are in an environment where we are looking for interest rate hikes across the board, and the markets are already pricing in for that.
So So in an environment where we've got investors chasing yield to a large extent and, there being nothing really that we can do about that, and that the scenario that we face, implications for the rand, just how much of an unwinding could we possibly be facing here?
Look, I don't think you'll see a massive unwinding. You must remember South African bonds are relatively well positioned in terms of the fact that you get a good carry on them. So for now, and I think whilst the rand remains relatively range bound and certainly behaves itself without those historical volatility levels that we've seen, and with the impetus behind the fact that we're now being viewed as one of the BRIC nations, it certainly bodes well from an investor perspective, offshore investor perspective. But that being said, as a local investor, in these current environments, I think that you are at some point going to start to hear more and more hawkish statements coming out of our Reserve Bank, and that potentially could drive the bonds that are currently very expensive at these levels.